are Digital Realty. We're the world's only full product spectrum for data center infrastructure. We got 300 facilities across more than 50 metropolitan areas on 30 countries on 6 continents. We have a 20-year track record with nearly 3 gigawatts of capacity in place and a war chest of $15 billion to support the growth of our hyperscale customers around the world, including another 5 gigawatts of new capacity to come. So we became a REIT as the first data center REIT IPO back in 2004, over 20 years ago. I came into contact with the company back then. I was the financial analyst on the IPO, literally building the model in Excel and fetching the coffee. While the early days and acceptance in the REIT world was off to a little bit of a rocky start, I think we priced the deal $3 below the initial IPO range. The REIT market has been really welcoming for the company's growth. We found investors that are dedicated long only, believing in different types of real estate asset classes and REITs exclusively. Those investors saw the merits of our business strategy, allowed us to fuel our growth as the company raised numerous forms of public capital from those investors and allowed it to invest billions of dollars to essentially buy incremental data centers, develop data centers. And over the last several years, we've been continuing able to scale further on a global basis using both public and private capital. So the REIT market has been very good to us along the way. So we are very fortunate to be catering to multiple waves of secular demand. We start with digital transformation. All different sorts of companies moving their infrastructure into purpose-built data center or colocation facilities to essentially empower their business with technology and deploy hybrid IT and cloud computing. The cloud is the second leg of a wave of growth. Numerous clouds, the likes of AWS, Azure, GCI, are landing and expanding with Digital Realty around the globe, bringing numerous cloud services to enterprise customers worldwide. And today, we are at the earliest innings of artificial intelligence and AI demand that we believe is going to continue to change the world as we know it, hopefully in a manner of good for all stakeholders. But all three of these waves of demand are essentially bullying our sales with growth. We have the largest development pipeline we've had in the history of the company, approaching $9 billion. We've got one of the largest backlogs of revenue for our company, and we're executing on both facets of our business, both hyperscale and AI, and our enterprise wins, which had a record 18% higher than our last quarter just in 2Q. In today's day and age, the word data center is no longer in the shadows. It's become the buzzword bingo on mainstream media. And along with that comes big announcements, the gigawatts or the bragawatt sizes in markets that were not really common to data centers, and sometimes with new and fledgling customers. What I would say is not all data centers, not all markets, not all customers, and especially not all strategies are created equal. We at Digital, we focused on markets that have both robust and diverse demand. So numerous verticals of demand from enterprise to service providers to cloud computing to AI, numerous cloud service providers, not single-threaded to one customer, and those markets where we're executing, those 50 plus around the world on 6 continents, they are also experiencing supply constraints, various power constraints, NIMBYism, numerous other elements that slow the ability to supply to come online. So we think not all strategies are created equal, and we think we have a strategy that is going to capitalize on the great growth we're seeing today and also navigate any potential volatility in this long tailwind of growth down the road. Albeit we're biased, we think we have a tremendous value proposition for all of our stakeholders and especially our shareholders. We have built this platform that we view as irreplaceable, called global in scale, very sizable, operating 3 gigawatts, runway of growth of 5 incremental gigawatts. We got the capital and balance sheet, that war chest of $15+ billion to fuel our hyperscale growth. So we're winning in that category, and we think we're going to continue winning and deliver great returns. That has built a backlog that is at near record highs for our company to roll through our P&L for years to come. We're having exceptional execution in our enterprise colo business, setting new records quarter by quarter. And we've got a long runway to growth and addressable market to capitalize on in this landscape of infrastructure and technological that is going to change the landscape of the world. And all these things are compounding and falling through to our bottom line as we speak, as you've seen in our recent results, and our future continues to look more and more bright.